Hello, welcome again to another video on understanding insurance claims. Today we're going to be looking at your additional living expense coverage under your homeowner policy. In another video we looked at coverages A, B, and C. A being the dwelling, B being other structures, and C being your personal property. And today some policies refer to this as coverage D, which is your additional living expense coverage. And a lot of people over the years I've heard refer to this as your living expense coverage. No, this is not living expense coverage. This is additional living expense coverage. Those costs, those reasonable expenses that you incur over and above what you would normally pay, say for food, for a place to live, or things of that nature, transportation or whatever, that you would not have expended had the covered loss not occurred. Now we're looking at losses that are covered under your policy. If the loss is not covered under your policy, you would not have any coverage for additional living expense. And what the typical adjuster will do, he'll look at, okay, what were your expenses prior to the loss? And then he'll look at what were your expenses, reasonable expenses that were incurred because of the loss. And what you would be receiving from him in the way of payment would be that difference, the difference between normal expenses and additional expenses. Usually you're going to find some limitation on the time period. Some policies will say a year. The most that you can collect on additional living expenses for 1 year after the loss. But the policies will normally say the time that it's required to repair, to replace the damage, or find permanent quarters elsewhere. And in some cases, if the dwelling is so damaged that it's not feasible to repair it, then you'll be looking for permanent quarters. But the insurance company will always try to work with you, but by the same token, they expect some expeditious work on your behalf. In other words, if you think your home is damaged beyond repair and the insurance company agrees, then you need to take all diligent steps to find permanent quarters, whether you're going to rent or whether you're going to buy another home or whatever. Because the insurance company will only pay for the reasonable length of time that it takes to find permanent quarters in those cases. Now you also will find in many policies what it's called fair rental value. So if you've got a portion of your home rented out, say it's a detached garage, and there is a fire and that portion of your garage that's rented out, it may not be rented at the moment of the fire, but it may be held for rental. It's a part of your structures that you are advertising, that you're trying to rent, but it can't be rented, it can't be lived in, it's not habitable because of, say, a fire or wind. So then you would have coverage for that. You would have fair rental value. What would that property normally rent for in your neighborhood at that particular time frame? And then the company would owe you for any additional expenses. Of course, if you paid the utilities, and maybe you charge $1,000 a month, but you paid the utilities, and normally the utilities were $250, then you did not gain $1,000, you only gained $750. And since you wouldn't be having to pay utilities, the insurance companies would say, okay, your loss is $750. And also, sometimes you may not have any damage to your property, but your neighbor's home may be so damaged that the civil authorities prohibit any type of, in other words, they close the roads and so forth, and there's maybe some investigation going on, and it prohibits your property from being rented or whatever, and maybe you have to move out of your home for a period of time, 2 weeks, 3 weeks, or whatever. Well, your additional living expense coverage would cover that time, would cover your additional living expenses for the time period that you're away from your home because of the civil authority mandate. So these are basically the things that are covered by your additional living expense coverage. Again, many policies refer to this as coverage D. But one thing I do want to stress is that it's not living expense coverage, it's additional living expense coverage. And another thing, this typically has to be incurred. If you do not incur it, then it's not a reasonable part of your claim. In other words, just because you say, well, I could have moved into a motel, but I prefer to stay at home simply because I like to be at home. I don't like to be out of my home. And for whatever reason, if you don't incur the additional expense, then it's not going to be a part of your claim. So basically it's an incurred expense, but there is a time limitation on that, and it is only for additional expenses that you incur because of a covered loss. Again, I hope that this video has been of some benefit to you, and if you like it and or would like to see additional videos, I ask you to please hit the subscribe button. And again, I thank you very much and hope you have a wonderful day. Thank you.